Good day, guys. Welcome to Forex Walker. Welcome to episode 75. So, on this episode, we will be talking about a few things. Here, I had issues with the volatility index, and hence, this trade with the pound CAD and the pound CHF gave me a few issues here, as you can see. Normally, okay, this line here is aligned with the previous shoulder in the currency. So let me show you the 1 hour time frame where you can see this previous shoulder that I'm talking about. So this is the previous shoulder on the 1 hour time frame, this previous shoulder here. So normally when I trade, the market goes to the lowest low and then it has to go straight to the 50% feed, and the 23.6, the green, the golden line and the green line. So here we have the time where it was supposed to go straight to the 50% feed. It did not. It turned around at 38.2 and it went to the previous shoulder here and below the previous shoulder, and we went to the 50% feed. So from here, once I see this, I know that the market has to break below the previous shoulder here, has to break below it and turn around or break below the previous low, but this was not supposed to happen here. So it was supposed to break below the previous low and take off. Here it did not break above this high. It actually turned around. It did the opposite of what I was expecting. And here you can see it almost broke below the low of the of the feed, the 0% feed. So here it looks like it touched it, but when you zoom into it, you can see that it didn't touch the zero line of the feed. It did not break below this low. So that is something that I was trying to explain here. So this spike here, I believe it was a spike that was created. These two spikes actually, I think they were created by issues with the Venezuelan war, and this second spike was created, I believe it was because of the G20 and the finances that were left suspended when the US president announced that he was not coming to South Africa for the G20. So I believe this was one of those reasons why we had a spike. But at this point, I believe from the volatility index, this is the last kick for the end of the year. And that this actually delayed, these spikes delayed the trade that I have on the pound CAD and the pound CHF. So for now, let's move backwards and see what we have here. So here you can see this is the WTI crude oil, and we've been looking at this for some time, and the oil prices are going down because Russia is selling its oil at the cheapest, at the lowest price. So the global oil market is forced to reduce their prices. So what they did is that they increased production through OPEC, but I'll be checking into that soon. So what happens when OPEC reduces its increases its production is that uh, we're going to experience a break below this low here, and if they decrease product, so this for this WTI crude oil is directly proportional to the price of crude oil. So when they increase production, what happens is that the oil prices are reduced, and when they decrease production, the oil prices increase based on scarcity. So this is something that I've been looking at on the oil market. And let's move backwards again. This is silver, I was looking at silver for some time, and it is difficult to buy silver with the US dollar going bullish after the Jerome Powell announcements, the last speech that Jerome Powell had. So what we have here is that on gold, we expect the 38, let me show it to you. We expect the 38.2 to be the only, to act as the 50% fee. So the market goes to the lowest point, it reverses at the 38.2 and it comes back to test the previous shoulder and then it takes off. It never comes back. So that is something that you need to watch out for when you are trading the gold and silver. But I only trade silver because I'm a carry trader, and the lowest negative carry at this point is with silver. So here we had our pullback and we went bullish and we came back. So we normally talk about the first touch, the second touch, the third touch always manipulates and price takes off, it never comes back. So that's how I trade price action. This is Wyckoff schematics, but you need to learn Wyckoff schematics before you point at what I'm looking at here. The what I say, the first touch, second touch, third touch manipulates. So this price is gone, but it is difficult for silver to take off because of the bullish US dollar based on the interest rate cycles that we have. Now let's move to the pound CHF. When I was looking into the pound CHF, it didn't give me as many pullbacks as it gave me an honest price move on the pound CHF, but the pound CAD, on the other hand, played a little bit because of the uh, of the the volatility index and the interest rate cuts and all of those things. So the CHF at that time was the best currency. In fact, it's still the best currency to sell, but the CAD is actually taking over above the CHF as the best currency to sell. So now let's look into macroeconomics and show you which currencies to buy and which currencies not to buy. So this is the Bank of England interest rate decisions. So here they're showing you that this is the previous here and this is the current. So this means that they held because there are no difference between the two, and you can see the straight line here showing the interest rates. So here in England, the man called Bailey, what they do is that the chairperson, what they do is that they vote together as economists. So here you can see that the MPC vote cut, where they voted for an interest rate cut, 4 out of 9 voted for the cut, and here they voted for a hike. We are in an interest rate cutting cycle, so we cannot hike. So 0 voted for the hike out of 9. And when they voted unchanged, 5 out of 9 voted for unchanged. Hence, the interest rates were held. Here you can see it says the Bank of England's MPCs. So MP is just a member of parliament. So voted 5. I don't know what this four is for, but 5 of them voted out of 4 because the total is 9. So 5 out of 9 voted, and for the hold in interest rates to keep the rates unchanged. So let's go back here. You can see that the last interest rate cut was on the 7th of August 2025, and they held on the 18th of September. They held again on the 31st of October, and they held again on the 6th of November. Here you can see that the date is the 6th of November. So you can buy the pound based on these economic reports. And let's look at something else. Here we have this is Canada. They introduced a, let's see, it's let's see from up here, it's a 25 basis points interest rate cut. So once they introduce an interest rate cut, you know that you can actually sell this currency. So CAD is better for selling Canada. And let's look at New Zealand. Here they say the Reserve Bank of New Zealand lowered its official interest rates by 50 basis points. Now, 50 basis points is a little bit aggressive. Normally, they take 25 basis points. So here they cut by 50%, 50 basis points. That means they're aggressive. So this currency is best for sales. Now let's look for here. It says Australia interest rates. The Reserve Bank of Australia kept its cash rates unchanged at 3.6% during the November 2025. So here you can see the last time they introduced an interest rate cut was on the 12th of August 2025. We went to 3.6 until the 4th of November where they introduced the last interest rate cut. So I apologize for running that fast on that one. Here, so the pound CHF, you can buy the pound CHF based on the pound being holding interest rates, and this is the trade that we're talking about. Here, the pound CAD is also, remember on the previous episodes, I actually talked about this trade not going well when it went down there. I thought it was about to break below this low, but it actually turned around. So you can actually hold this trade. Remember on the previous episode, I think it was episode 74 or 73, uh, where I talked about the price turning around here. No, it will not turn around here. It will actually go to the previous shoulder, this previous shoulder here. It will actually turn around here and go all the way down. But the pound for the pound, yeah, the pound will go bearish for some time. But at this moment, a lot of central bankers are going to buy the pound based on the interest rate hold. The central bankers, the hedge funds, they're going to buy the pound based on the interest rate hold. And the CAD giving us an interest rate cut as well, and the pound holding. So this is a basic monetary policy divergence trade where price will keep moving higher like that. The USD CAD as well will be moving higher, but at the moment I'm expecting some kind of a pullback, and I would like to see whether it will project something that I have drawn here before it takes off. But the US dollar is bought based on the Jerome Powell interest rate hold in December, and the Canadian dollar just introduced an interest rate cut. So that will be a monetary policy divergence that we're looking into, and we're expecting to actually break above that high up there. The the USD CHF as well is doing well for us. You can see that we got our first touch, second touch, and third touch manipulated here. Let me zoom it for you. First touch, second touch, third touch manipulated, and the takeoff was seen over there. So this trade will also be looked into. The AUD will also give us that long move. Remember, if you can reverse this video, you will see that the AUD actually gave us an interest rate hold for this November, and central bankers and hedge funds are going to buy that interest rate hold and the monetary policy divergence between the two currencies. The Australian dollar holds interest rates and the CAD cuts interest rates for November. That is a monetary policy divergence. And this is the reason why I was telling you on the previous episodes that your RSI is working against you. This price will break above this high, even though it looks overbought. Thank you guys. See you on the next episode. Goodbye.